year, the amount of revenue generated from Nigeria's rail transportation dropped to 598.73 million naira in the second quarter this year, and that's according to latest reports by the National Bureau of Statistics. The amount represents a significant drop when compared to 2.07 billion naira recorded in the first quarter. At the same time, the number of passengers fell from previous 953,000 to 422,393, and this is largely due to the
negative implications for the global economy. One, that means that the food and energy prices that we are currently seeing, the food and energy crisis that we are currently experiencing, I beg your pardon, would linger for longer. It also means that for many, it also brings to fore, some journalists called it the Hunger Games, right? It also brings to fore that the issue of food insecurity that is ravaging many low and middle income countries. It means that, the commodity prices are going to increase quite sharply, but also given weaker currencies in many of these low and middle income countries, food is going to be expensive. It's going to be in lower supply, and then it's going to push millions and millions of people further into poverty and into starvation. Last week or 2 weeks ago, the World Bank released a report citing that, this Ukraine and Russia war is increasing food insecurity. And now with Russia pulling out of this, I think it's just going to worsen the situation.
Yeah, and obviously I know the next price movement, we see depends on, Russia's next move. What do you see coming?
I think it's a bit too early to say, Ladi. I think we need to just keep watching the space, at least this week. I know we are going to, I expect we hear some news from Russia coming this week. At the moment, we are seeing some blame game. Russia is blaming Ukraine. Ukraine is blaming Russia. We're seeing all of that. And the United States also blaming Russia. So we are seeing a lot of blame game at the moment. But I think because the implications are quite huge for the global economy, particularly for low and middle income countries. I think, particularly the issue of food insecurity, right? Already it is bad. Like a lot of countries are struggling with starvation. Food is expensive. There's a shortage of supply of food, particularly some of these key commodities. In addition to that, due to weaker currencies, it is even more expensive. So I expect we hear some news about Russia's position in the coming weeks. Already, yesterday, I know that Ukraine still released some cargoes of food, some of these grains yesterday. We don't know what Russia is going to do about that at the moment. Hopefully, they do not do something drastic that will further push prices upwards.
Right, and what do you see coming for, food inflation? At this point, we know that's already elevated right now.
I didn't get that question. Can you come again, please?
For food inflation.
Oh, food inflation. I think if what we are seeing persists, if the prices of these commodities, wheat, corn, barley, keeps trending upwards following Russia's suspension of this deal, I think food inflation is going to continue to trend upwards. If you look at Nigeria, for example, look at the floods already. The floods are already pushing domestic commodity prices upwards. We have a weaker currency, which is also worsening imported inflation. Now with this, we know Nigeria imports a huge portion of its wheat requirement. So if you look at your flour, your other commodities that have wheat as an input are likely to trend upwards if this persists.
Right. On your slide again, there's see that steel companies' profits are falling, at this time. What's driving that?
I think it's just a sharp drop in the prices of steel, right? Quarter on quarter, at least for Q3 2022, the price of steel dropped around 60%, and that is that's really affected the revenues for many of these steel companies. The Tata India, which is like the largest steel company in India, they recorded an 87% decline in their profits in the third quarter of this year. And many other steel companies globally also recorded sharp declines in their profits in the third quarter of this year. And that's just mainly due to the sharp decline in the prices of steel globally. Also, that's driven partly because of the slowdown in global economy. We are not seeing a lot of infrastructure projects at the moment due to the slowdown in global economy, as well as the higher interest rate environment. And all of these factors are driving the prices of steel downwards, and is also hurting the profits of many steel companies globally.
All right, let's look at the naira now. The market we don't like to talk about. We're seeing it there plunge about 805 naira to the dollar. And we see the external reserves also down at $37.45 billion. Is it the redesign proposal? Is that what's driving it?
I mean, at this point, like, there are many factors. We know about the big legacy factors that are driving the naira. Like, the next month is Christmas. There's a lot of demand coming for Christmas, coming from manufacturers to, you know, get their stock up to date in anticipation of Christmas. We've got the election. Also, the redesign is also having some big effects on the naira. But I would really not love to push too much on that now. But I'd like to tell you about some of the good news of the weaker naira, at least for the Nigerian economy, and that would be that is what's the word now? Remittances, right? With the weaker naira, there's a lot of evidence in the literature to suggest that, you know, when a currency is weaker, particularly in the receiving country, we see more and more remittances. So despite as the naira is weakening and it's bad news for many people, there's also some light at the end of the tunnel. There's some silver lining, and that silver lining is remittances. I mean, last year, the World Bank estimated that remittances to Nigeria was around, I think, 22 billion US dollars. So that is some huge inflows. And this year also, given the weaker naira, I think we expect more and more an increase in remittances to Nigeria. In addition to that, we also have more and more migrants from Nigeria. We had over the, I think in Q3, we had around, at least the UK, around 65,000 new migrants moving to the UK. And these people are likely to continue to send remittances, you know, back home. So I think that is one positive effect of this weaker naira, is that the inflow of remittances to Nigeria would increase significantly.
And I see, looking at the domestic commodities market, I see most prices, you know, trending upward.
Yes, indeed, like, the two big factors affecting domestic commodities prices at the moment. One is the flooding, which is kind of creating a shortage of some of these commodities and pushing prices upwards. In addition to that, the weaker currency is also worsening imported inflation. I mean, if you look at the prices of some of these big commodities, look at the price of Gari is up 77% to 23,000 naira. If you look at the prices of onion, a 50 kg basket of onion is up 44% to 46,000 naira. If you look at a bag of rice, for people who, you know, gifting for Christmas, I think that's going to be quite interesting how that works out. A bag of rice has increased 40%, is now 45,000 naira. And many other commodities also are trending upwards. We just have a few commodities who are flat, like cement, for instance. 50 kg bag of cement is flat at 4,200 naira, as well as semovita. A 10 kg bag of semovita is also flat at 6,300. But most other commodities are trending upwards, and mainly due to the effects of the flood, as well as imported inflation from the weaker currency.
All right, thank you so much, Dr. Adesola Sumoni, analyst, financial derivatives company. It was great having you. Thank you.
Thank you for having me on the show.
All right, we'll take a moment now.